Hi everyone, and welcome to the third session in the Bank of the Future webinar series. Today we have a 60-minute panel discussion entitled The Future for Corporate Banking Post-COVID-19. I'd like to introduce you to our moderator for the session, Tim Tyler, who is the Senior Industry Principal for Corporate Banking Global at Fenestra. Tim, I'd like to hand over to you to get things started.
Thank you very much indeed, and I'd like to offer an extended welcome out to everybody that's joining this session. Before I move to introduce our other panelists that I would ask to, in the spirit of being open and transparent, let's all turn our cameras on so we can all see each other and talk face to face. That's fantastic. Look, the COVID crisis has really caused shifts in behaviour, I think. Currently, Saudi Arabia is working to minimise that initial shock caused by the pandemic. But looking forward, I think Saudi will encounter ongoing challenges in the longer term, particularly to diverse its economy and become more resilient whilst implementing the right support for businesses to flourish. So with that in mind, I really am delighted to have speakers from both sides of the fence. I've got the bankers from within Saudi. I've also got somebody from a corporate in Saudi here to talk with us and share their views with everybody. So to start the introductions, Ahmed, if I could turn to yourself first, just to spend a moment introducing yourself to the audience.
Okay, good afternoon, everyone. I'm Ahmed Abujbeka. I'm the CFO for our RAP contracting company, which is the construction arm of the Rashli Group. We have executed actually mega projects. For the one that do not know the company. We have done Medina Airport, Terminal 5 in Riyadh, and Haramain Highway Rail Speed project. I use actually to work for ACC for the last 8 years. Before I used to work in Alcatel Lucent as head of treasury, and before that banking. And I hold MBA in finance and CFA.
Excellent, Ahmed. Thank you very much. And then turning to Anjum.
Yeah, hi everyone. My name is Anjum Mirza. I'm currently the head of trade finance at National Commercial Bank, which has a head office in Jeddah. Prior to this, I was heading the same department at Banque Saudi Fransi. And prior to that, my career had corporate investment banking and wholesale banking, as well as international banking and FI. As far as our main focus at NCB has been more to revitalize trade finance, not only from the conventional, but structured trade solutions, as well as a platform, enhancing the digitalization platform, as well as offering for the customers.
Excellent, thank you, Andrew. We'll certainly come back to some of those points, I'm sure, during this session. Then looking over to Mohammed, if I can ask you to introduce yourself.
Yes, good afternoon and assalamu alaikum, everybody. My name is Mohammed Nasrullah. I work for Arab National Bank and I look after the cash and trade business. There, I've been around in this market for almost 10 years. And before that, I was working with Standard Chartered, Deutsche Bank, Societe Generale, largely in operations and in transaction banking. Yeah.
Thank you very much. And finally, Carlos.
Well, very good afternoon, everybody. It's a pleasure to be here. My name is Carlos Teixeira. I'm a global industry principal in Fenestra, carrying several roles across the organization for the last 15 years. And before that, I was actually from the bank side. So I worked in a bank back in Portugal, where I'm originally from, for 10 years, and the full background around trade finance. So really a pleasure to be here today.
Thank you, Carlos. And I suppose myself, my name is Tim Tyler. Very similar in role to Carlos. I'm an industry principal. Carlos is based in region. He's based just down the road in the UAE. I'm based back in London, but together we hope to bring a global outlook. And I think a global outlook is really key. I'd like to split our conversation into some main chunks, if I may. And I'd like to class them into different horizons. The horizon of today, and how we've all reacted over the past months to the situation that we find ourselves, and then looking at future horizons, the near term and the longer term. So starting with the vision of today and how we've reacted. And actually, rather than diving in on the banking side, I think, Ahmed, I might actually turn to yourself first. From an operational perspective, how impacted have you been as a corporate working in this COVID environment? Now, Ahmed, I'm going to have to say I'm sorry that the catchphrase of 2020 is "you're on mute." Something it's something we all do on a daily basis, I'm sure. But I'll hand back to you now again.
Yes, as you were expected, this was, no one did prepare a plan for it, and we did have a lot of problems once this happened on day-to-day business and documentation movements and all related to the workflow. We did have a day-to-day discussion with our banks, and we do have done a lot of exceptions to have our business going on. This was actually signatures, workflow, original documents. You can name it. You can name whatever actually on the day-to-day process that you expect was not. We were not able to deliver. We were not able actually to work normally. We have done a lot of exceptions, and these exceptions were supposed to come live actually once we come back from COVID-19. But personally, I still do not feel that we have evolved enough to capture this drop. We still have the same comfort zone that we used to do in banks. We still have the level of paper documents that we need to move. Although I know that one of our banks of relation had moved already to online business and the future banking, you can say, but still we are far from being there.
And that's interesting. It's online and digitalization has been happening for a number of years, yet particularly I think in trade finance we're still heavily paper bound. Anjum, from your perspective, how has the bank coped with this sudden shift of, obviously still being paper bound around this line of business, but having to work with that paper perhaps in a more distributed form?
Yeah, well, it's interesting just to get a perspective of the word that used, paper bound. Just quoting 10th ICC Global Survey, about 4 billion pages of documents circulate in the documentary trade finance in the world right now. So that is the size and massive size of challenge that's available in the country, in the world, in fact. Considering, as Ahmed was saying, it was an unprecedented effect, and I think digital and online requirements were really challenged in the COVID-19 period. And I think one of the most important part was how much could we, and I think everybody started about all the institution, financial institution, and on the corporates, from supply chain partners, all the stakeholders in the supply chain. They started looking at different ways of how different solutions could be provided to avoid such a requirement of physical documents. And digitization just took a little bit of second leap, as I would say. Mostly, you see, digitization over the period has been mostly in retail and consumer side. Corporate did not really jump into the bandwagon, mostly because the solutions were based on what the banks had in their armory. As soon as the other thing that happened in last 5 years is the introduction of fintechs that started coming into the space of banks and tried to find solutions that were not banks were not going for it, so other people started creating those disruptions. That has also accelerated the banks for introducing new solutions. And I think in 2019 was the largest, again, an estimate that I read in the ICC survey, was somewhere around $1 trillion, over $1 trillion would be spent in digitization of banks, platforms, and offerings. So that gives you a comparison of how big a challenge there is right now. But where the gulf is so big that even just looking at trade finance and the multiple products and multiple, let me put it this way, it's basically corporates tend to transfer their risk to a third party, which are the banks. Over the period of last 100 years, 200 years, that's what happened. But while it was being done, the banks really created products that were more around risk mitigation, right? They never looked at it from digitizing these risk mitigations. And I think that is the new challenge coming next 10 years. In fact, 2 years to be accelerated. And I think we'll be seeing a lot of initiatives that are coming in different forms and ways.
And Mohammed, thank you, Andrew. Mohammed, did you see from an A and B perspective, can you echo really what Andrew was saying? And as we got deeper into this pandemic, how easily were you able to pivot into this new operational way of thinking, perhaps?
I'll basically go a little back to what Anjum said before I go into your question. And that is that, there are two sides to this coin. One is the cash business and the other one is the trade business. Now, if you look at the cash business, which is cash management typically, which relates to making payments, vendor payments, salary payments, collections, that could be an e-commerce business, a point of sale business, a bill payment business, or a virtual account business, or a fintech support, because fintech works around a SaaS model, which is basically a banking as a service model that we have created for fintechs over here. And as you know, there are different types of fintechs, and I'll come to that a little later when I finish this argument, which is around the cash business and the trade business. Now, the cash business, in our opinion, is fairly digitized in the marketplace. Almost 80% of the customers today, or in fact, I would say the larger corporates, 100% of them would use online channels to look at for information. And I would say the large corporates, 100% would also be initiating transactions. So this is a definite phenomena that is there in the marketplace, and Saudi is very much on the map as far as digital transactions are concerned on the cash side. Now, on the trade side, I agree with Anjum that the adoption has been a little slow, especially transaction initiation and information. Most banks offer those services. We are one of the beneficiaries of a system that we have recently launched through Finastra for trade transactions, and that's working well. So we hope to have a greater adoption of trade transactions onto the trade system. Our target is to have the same kind of focus. Next 18 months, 80% of our customers should be moved onto the digital channel on the trade side as well. And this is what the aspiration is. And in fact, the larger aspiration is that the electronic channels, the electronic banking, which is the face of the corporate bank, should be able to do all sorts of transactions, for whether it be onboarding. It's not only onboarding of the customer, but also onboarding on services. Because if you look at electronic banking is the starting point, and then there are other services like you do cash pickup, you do corporate CDMs that are available in the marketplace, which we offer. So or a payroll mandate, or a POS mandate, or anything of that, or e-commerce mandate. So everything should be, the onboarding should be online. Customers should be able to do their loans online, which is the customer should be able to see their limits online. So this is the roadmap that we are looking at. I mean, so as far as we are concerned, the only way to reach our bank in the next 5 years, or I'd say in the next 2 years, and even earlier is through an electronic channel. So largely that is the case. Now the other piece which Anjum mentioned about was the fintech companies, and fintech is a real phenomenon, and we have seen that actually fintechs are actually helping our business grow, because most of this money that was actually lying around in cash in people's pocket is now being digitized, and if you miss the boat on fintechs, you've missed the opportunity. And so Arab National Bank has been fairly active in soliciting the fintech business. Over 60% of the new fintechs have been licensed by Sama Sandbox, are banking with Arab National Bank today, and we provide the full solution, cash in, cash out from various methods, whether making a B2B payment to any vendor or self-transfer, to cashless withdrawals at ATMs and remittances and stuff like that. So it's a full package that we offer, and we think that our business is actually growing because of fintech, because there are POS aggregators. Now, so we could not reach the smaller merchants. These guys are actually going and doing work for us, and they're bringing them to us. So we have the master POS agreement, or a master e-commerce agreement, or a master bill payment agreement, and these guys are going and getting business for us. And then you have the other companies who are e-wallet companies, and they're mopping up liquidity from the market and placing it with you. If you have the trust account, you have the business. And if you go further, there are people who are doing crowdfunding. So there could be equity crowdfunding, there could be financing crowdfunding. There are different, very interesting propositions that are there in the marketplace. And I think very, very interesting times in KSA, and we're looking forward to sort of participating in this opportunity as it evolves in the marketplace. Yeah.
And I'll certainly come back to some of those points you made, Mohammed, in a moment. I'd like to pick up on one of the words you used, which I think is really pertinent, and that is adoption. And, we can do from a technology in banking, and even from within corporates, we can deploy whatever technology we want, but we've got to get it adopted. We've got to get people to use it. Carlos, if I can turn to yourself, bringing perhaps a wider regional view, so beyond KSA, do you think that Saudi Arabia is broadly on track with other countries in the region, or perhaps in areas further ahead, or indeed, with a more global outlook? Where do you think the region stands?
So looking particularly to Saudi Arabia, before we go to the wider vision, let's not forget that Saudi Arabia itself has already a massive internal market, right? So the reality is that very early, banks were forced to be ready to address automation within the local market. So forgetting the international, forgetting the dealing with the multinationals, they were forced to automate this. And the reality is that we've been talking about digitization for quite some time. And I've always, when I look back and I look to 2020, what unfortunately brought us in this pandemic situation. But the reality is that this was probably the final push that was necessary to show us that actually it was possible. I totally agree with Mr. Nasrallah. Depending on where you look into it, you have different maturities of digitization track. You'll see the cash driven heavily from the retail side being wider adopted from a digitization perspective, but at the same time, you still saw some areas where you would need to issue checks, where you need to go to a branch to deposit checks. And the reality is that when the whole pandemic arrived, we saw banks embracing digital and rolling out faster digital products. So for example, today, I'm able to deposit a check without visiting a branch. I just take a photo of the check through my retail app, and I don't need to go to the branch to deposit the check. It's done electronically. This was not possible before pandemic. We have adapted, and that's really what is great about human beings, is that we adapt and we embrace transformation, and this is what was missing. Being in the Gulf for 15 years now, the business in the Gulf is heavily relationship driven. We all like to go to the branch, have a coffee with the branch manager, and understand how they are, because it goes beyond business. It's actually relation. How is their family? And here is my LC to be submitted, and so on and so forth. And while we were in an advanced phase in other areas, in other countries, while we'll be able to offer digital trade finance, but the reality of the adoption was quite low. And the moment that in March, we see the lockdown happening, and as well mentioned by Ahmed, where the corporates themselves were challenged from a signature perspective, we saw banks actually embracing that technology and pushing it to their clients as never before. And we saw adoption rate going completely out of the metrics. We saw banks using the technology as it was meant to be. And now, as we look to the future, we saw aligned exactly with Anjum and Nasrallah was saying, was the fintechs arriving and at the same time helping on this transformation. The reality is that if we look back in time, the electronic UCP was actually published in 2000. This was meant to be the first step of the digital transformation of trade finance. Not much has ever happened from that. We see that, and we've been, especially Finastra, through our World Trade Board, embracing and pushing to the digital transformation of trade finance. But the reality is that it was not an immediate need. It was something on our radar across every single bank and every single corporate, but it was not urgent. And today, we actually are aligned, and we are working together on the future to be fully digital.
And so, Carlos, taking some of those points further, it's great, you know, adoption has accelerated, and perhaps digitalization is accelerating. Ahmed, if I can turn back to yourself again from the corporate's perspective, how closely aligned do you think corporates and banks are on that digital journey? You know, are the sort of digital services that banks are offering what you need, what you're asking for? How closely connected do you become to those? So does it go beyond just online, for example? Do you see, you know, being able to connect your ERP directly to your banks, for example?
Okay, so just before I reply to your question, Tim, just let me tell you a story that it's the problem that it's not a paper bound only. The problem was even bigger than this. It's a little bit funny story, but one of my main banks that I'm dealing with used to send me a treasury report every day, and this report is really sensitive to me, and I use it for taking long-term decisions. Maybe during COVID-19, this report had stopped. And when I checked with our relation, the reply was that there is one machine available in the office, and there's someone should be physically there to generate the report. They cannot generate the report online. I think it's for some security or technical reason. And okay, then let's wait till you are back to the office. The surprising and funny thing that when they are back to the office, I check with them. What steps have you taken just to avoid this happening again? And as surprising as it should look, they did not change anything. So although this available actually systems and available support is there, but they are, it's embracing, as Carlos was saying, that we need to embrace this. We need to go out of our comfort zone in dealing with this type of technology.
And so I'd maybe turn to either Anjum or Mohammed. Actually, let's go Anjum first. How do you go about prioritizing change, particularly when all of a sudden we're thrown in at the deep end, proverbially? You know, it's we've had short-term objectives, medium-term objectives. All of a sudden, that's all out the window. We've got to refocus our energy. So what's the sort of decision-making process you have to go through in terms of, sorting out how you maintain service?
A very good question. Let me try and answer that with a little bit of a background. The actions of the banks should not be dependent on how your demographics of your society or the way they are progressing in terms of embracing a technology. Basically, technology doesn't wait. It could come from any part of the world. It's how you embrace it. And you don't find at times utility of a certain technology for one client. Maybe you have a technology that's available, or maybe has a utility for a single client or a couple of clients. And that has been the challenge for a lot of decision makers in the financial industry in Saudi Arabia. That mindset had to change, right? So in last couple of years, that mindset was changing. So what I mean by that is, if we start talking about demographics, first we analyze what is the volume that we're looking at, right? So if, for example, 80% of all trade, as they say, is an open account, right? The remaining, and it's just remittances and payments, right? So very, very little documents required on that side, right? Anything required by the bank. So you are pretty safe. You can sit and make your remittances against any procurements you had. You just need supply chain support, and that's about it. But when it comes to trade or let's say, for example, some of the cash management products, technology is very important. So once we talk about corporate acceptance, so the corporate acceptance in last 5 years or 2 years has accelerated, and especially in last 3 months, 4 months, it went through the roof. Let me be very frank. I mean, our digital onboarding, we had about 25% of our trade-related clients on digital, 20% of our clients on digital back December 2019. We added 7% more. And that's, we are talking in hundreds of clients. So 7 to 10%, in fact, just in the middle of 2 months, 2 or 3 months. Now that gives you that once the situation is created, everybody runs after it, right? But if you were not prepared with the technology, right? If you did not have what technology was offered for even 1 or 2% of the market, right? That's the difference. That's the difference. So for example, if I have a product that I can offer to all the clients, I look at and do my survey with the market, right? But certainly at times there are technologies that should be available, and it should be, and now it is so easy. It's plug and play, mostly API driven. So it's not that difficult. With multiple, ERPs with corporates, the integration is there. And like Ahmed was saying, that bank had to be ready for it. That bank had to be, I mean, these are very, very simple things. And if a requirement comes in, like Tim, you were asking, the bank should be jumping onto that. So even a single requirement for a single client should not be evaluated as a particular CapEx budget for it and all that, right? So if you have a basic platform, if you have a basic network of a platform that can provide the basic requirements, which by basic now, I mean, it's not as basic as it used to be 5 years ago. Now we are quite highly technologically advanced. And I think almost all banks and financial institutions have the technology to do that. It's just adding on. It's just going for it. I mean, like Nasrullah was saying, how many banks were fighting for all the cash management products, right? There was like a very normal set of business methodology, circulating around it 5 years ago. I promise you that. Today, it's a total different ballgame. So the mindset of the banks as well as the corporates. Now the corporates, we did a survey back in 16, 17, sorry. And we got that survey, 25% of the corporates in Saudi Arabia were willing to adopt to the digital platform. The rest, they said, we'll bring the physical document to the counter because our Sheikh does not like to, he just still likes to sign the LC application. Now, today, that story's changed quite a bit. Now, I would say we have reached somewhere around 60%. And that's the biggest leap I've seen in Saudi Arabia. Saudi Arabia, being such technologically advanced, in the top 7 of the world right now, as far as technology is concerned. The biggest advantage that the financial institutions have, it has one of the most progressive regulator also. When it comes to digital, the regulator will support you and give you decisions in a fortnight max for so many digital initiatives you can make. I mean, so the support from the government, regulators, and other is there because the e-government is so advanced right now. Now, what we need is the business, the supply chain, the corporates, and banks to connect on these networks. And
sorry to step in there. I think we've heard numerous times from all of you about supply chain. And I think if we look at the wider context of the position that we're in and how we're reacting, it's not just a one-to-one relationship. There's, what I tend to call it the ripple effect. And supply chains, I think, are very vulnerable to a ripple effect. And I think, Mohammed, as well, you in particular mentioned about the impact on the whole supply chain of what's going on. Are there any particular measures that either central government measures or measures that you've helped implement within the bank to perhaps directly help both end clients but also the supply chains either side of them?
Is that a question to me?
Yeah, Mohammed, first, would be great.
Yeah, I mean, the products are basically structured in a way that they address the needs of the supply chain as well. I mean, there is no doubt about that. And if there is, as Anjum said, 80% of the trade is happening on open account, and these are ICC numbers, and which is a fact, but largely, Europe is largely on open account. So, and the US is mostly on open account. So, but here also a lot of trade happens on open account, and so the supply chain partners are looking for solutions. I mean, for them also, if you have an offering that can do a supplier finance or a distributor finance online, and you can offer those services through your front-end system, they would obviously be facilitating that trade. But I think the bigger problem, as we see it today, is not handling the supply chains. Largely, I think, on the trade side, whether it's open account or whether it is LC based, it is more about digitization of documents. And that is the killer. I mean, this is something that needs to be resolved. And there are companies who've come in. We've seen Bolero that has come in. We've seen S-Stocks which has come in. Bolero has been focusing on e-bill of lading and stuff like that. And they have moved around quite a lot in terms of, signing up with shipping companies to sort of issue e-bill of ladings. But the fact is that the whole supply chain is not linked to that. People have not, I mean, first of all, there are no defined solutions to the problem. Everybody has to get on the same, and I think for this to progress, it is my opinion that the regulators need to come in and say, okay, look, the documents need to be now exchanged in a digitized manner. Now it's a simple case of an ACH. Sharia, you call it ACH in your market, we call it, I mean, we have Sharia over here, but we are moving to the ACH model in December this year, the IPS program, Instant Payment Systems. So effectively driven by the central bank, 24/7 payments, and hopefully going forward also in other currencies. So something like that needs to be driven by the regulator. Look, and in fact, this is a subject of ICC, in my opinion. I mean, Carlos mentioned that, you had UCP published 10 years back. Nobody looked at it. It's a piece of junk, basically. Nobody practices it. So at the end of the day, somebody has that. And quite frankly, ICC has national committees. They need to move them and then galvanize support for digitizing documents. You have technology today. You have blockchain. That's the best way. Everybody sees the same set of documents. So effectively, it is possible. I think supply chains will become a lot more efficient if you have focus and delivery on digitization of trade documents, especially. This is our point of view on that. Yeah.
And picking up on that, I mean,
sorry, Tim. Sorry. Let me
go on.
because let me step in because Nasrullah mentioned it was a great point from the regulator perspective. We cannot never forget the regulator, and the reality is that there has been in multiple occasions the push to digitize trade finance, but we need to be honest to ourselves. If goods go from point A to point B, there are paper that needs to go with those goods. That's the reality. And that's why it is so difficult to digitize the whole supply chain, because today the customs, or most of the customs, still need the paper. They still need to check the veracity of the paper and who is the ownership of that document. And while we haven't addressed this, there's no way we can digitize. And a great point, Bolero, S-Docs, and numerous others, that they have digitized the trade finance, but by actually creating the digital version of the documents. But it's beyond that we need. We need to digitalize the documents, meaning that we need to be able to be on a paper base, digital base, back to the paper base when necessary, and understand who is the ownership at any given time of that document. So we at Finastra, for example, we are working with a fintech that is doing that, because we are not going to do that, let's be honest. We will focus on automating the bank procedures, automating what the regulator is doing, looking for from a protection from a bank side, but then the whole working supply chain from a document perspective, we will work with fintechs, we work with S-Docs, we work with Bolero, we are also working with CargoX. CargoX is that's what they do. They pick up the document, becomes digital. They have a smart contract on it, which you know who owns it. And at any given time, it can convert back to paper because of the customs. So it is a wider discussion. But the good thing is that once again, the pandemic, so COVID brought the future forward because it pushes to have these discussions. 1 year ago, we knew we need to have these discussions, but we would leave it on the back foot. Yeah, we will have this, inshallah, next week. And the reality is that today we are forced to have them because not only the banks understood the benefits of the digitization, but also the corporates. The same ones that wanted to go to the branch yesterday, today they ask themselves, yeah, but why do I need to do that? It's much more efficient if I do everything remotely. So yeah, we are aligned on this.
And Jim, you were going to come in with a point there.
Yeah. You see, this is the real interesting conversation that takes us, our thought processes, and to create solutions around it. Now, the core issue over here is definitely physical documents. But then again, why were these physical documents created, right? So that comes around the risk transfer mechanism. So there's an intermediary, which is a financial institution, that is absorbing the risk of a third party, right? Of a particular buyer. That's what basically starts everything off. I mean, the solutions around it are multiple, to be honest. I mean, similarly, like what NCB is right now doing, it's going to work on a supply chain solution, okay? And not only that, I think it'll be one of the earliest, the first bank in the whole region, in fact, that have a digital solution for the documents too on supply chain. But while we say that, this is the regulator. So we have a regulator but then that regulator is in a jurisdiction of KSA, right? Saudi Arabia. Now then, the customs is one of the authority that needs to be tackled, right? And it's still on a paper based. But while we say, then we've only tackled the import side. Then what about the export side, where we have multiple other jurisdictions in the world that you move around, right? So once we start thinking too global, the initiative dies down. So my always thought process has been, and I really promulgate this thought process, that whatever is today that you can manage in the jurisdiction you're working in, at least start it off, because the more corporates you can give the solutions to corporates, the better the financial institutions will be helping the whole environment. And technology is there. It's like a canvas. So the canvas, what you need to do is paint on the canvas. And so the canvas of technology is available. I mean, Finastra has their own canvas for, I think, for fintechs. And similarly, there's a cloud-based initiative coming in Saudi Arabia now. So as far as blockchain technology is concerned, which I totally agree with Nasrullah, I mean, that particular solution for having all these risk transfer mechanisms can be easily undertaken as far as the will is there and your regulator and your jurisdiction is allowing all those things.
Yeah,
So
if you don't mind, just add to what Anjum said. You know, if you look at this marketplace and you look at LC traffic, around 30 to 40% is local LCs. And if you put a broader brush and look at the open account business and collection business, local trade I'm talking about, you could easily say that around 50% of that trade that is happening here is local trade, basically, and 50 happening outside. So, I mean, you can always start internally. I mean, there has to be a starting point somewhere. If you're waiting for the world to evolve, that will never happen. So, and that is the job of, that's why the ICC committees are in place. And that's why ICC is there to sort of take feedback from all participants in that process. And all countries have national committees. So if a model can be evolved locally, and which is basically a very large part of the trade that you do, it could have a ripple effect, and it will go and affect other countries also. There are probably countries like who are highly automated, countries like Japan or Korea, or for that matter, even most of the Scandinavian countries and most of Europe, they would be getting onto the bandwagon very, very fast. But there has to be a model that evolves. And I think a good starting point is a electronic bill of lading, because that's a title document, and that needs to have certification because that passes on title of the product. So that is a starting point. And then you can always, the ancillary documents can always be exchanged, whether the invoices or packing lists, or in fact, there's a project that we started with the Ministry of Foreign Affairs a few years back, and which has actually gone to the back burner because of other things, was the issuance of electronic certificate of origin. So as you know, that is happening in Saudi Arabia, requires certificate of origins. And those were being automated, and we are still working, and it hasn't been delivered yet. But the whole idea was that, look, that document will also hit customs. It will be received by the banks in electronic form, and that customs will know that this shipment has had a electronic bill or certificate of origin issued for that consignment.
Now, I've got so many points I'd like to dive into. I'm going to choose one first, coming out of that, and that's to go back and think about the regulator and the impact the regulator has on this. And I like the phrase of having a canvas to paint on. But I'm going to ask for perhaps an outside-in look to the regulator. And Ahmed, from a corporate's perspective, when you look upon what the regulator is doing with banks within KSA, do you think, to you as a corporate, the regulator is friend or foe? What I'm trying to say is really, are they allowing the sort of solutions that you'd like to see as a corporate, or are they perhaps slowing things down a bit too much for you?
Actually, to confirm on this, the regulator in Saudi Arabia is, we need to tackle it in a different way. The regulator have very strict rules, of course, as all other regulators, but I'm saying that we have this discussion before, that you can feel that all banks are reading from the same book. Of course, they are not competing among themselves. But I confirm what Anjum had said, that the e-government is there. The regulator actually is allowing you to use as digital as you can use as long as you can initiate, as long as you can release an initiative that can be taken into consideration, that regulators are willing to discuss it, are willing to apply it. They are changing every day. They are adding a lot of services. They are allowing. I have been myself invited to a lot of discussion from regulators how to improve things. But also to comment on what Tim had already said, that it's not a matter only of trade finance. This market, specifically this part of the world, had mostly been name lending process. We are depending to release facilities or to release trade on name lending process. But while the market used to be cost-oriented, price-oriented, we normally look to the cheapest bank or cheapest financial institution that you deal with. Now with the new digital process, this has changed. Now we are looking to the banks that are giving you the best service online, the best digital service. They are easing your life. They are getting you done your business in an easiest way, not in the cheapest way. This is a critical change in the market. COVID-19 had pushed it even further, but this was happening along the way. And I think all banks now are getting this edge and they are building on it.
And I think that's a really interesting point, isn't it? That it's now not just a price comparison. Now it's a service-based decision, and not just necessarily on a personal relationship basis, but on that digital relationship that you can have with your banks. So what I'd like to do, I'd like to change the focus maybe to look a little bit further into the future. So we've mentioned the plethora of fintechs that we can play with, and we've just come off the back of touching on regulators within numerous talk tracks there. And in what I've seen, my experience, fintechs often play just a little bit ahead of the regulators. They wait to get pulled back by the regulators, whereas perhaps as banks will sit just a little bit behind the regulator. But Anjum, turning to yourself first, if you were thinking of a 3 to 5 year horizon perhaps, and it might well be linked to some of the trade discussion we had there, what do you think is going to be down that pipeline of change that you think banks within the kingdom will have to look at delivering for their clients?
Okay, so very, very good and pertinent point, because future is what we are here for, and we should think about that. Just to give an example to start with, I'm saying again, regulator and other environment that you work in is crucial. We came up with, I think NCB came up, was the first bank to come up with STP, straight through process for issuing LG under 100% cash margin. Now, imagine a customer through his mobile or his app just goes in and clicks a few buttons and he just issues his guarantee now. Doesn't need the limit anymore, right? Because we have addressed that part. So doesn't need to sign an order note, doesn't need to, which was one of the promises, it's a negotiable instrument, right? So you found a solution where our regulator immediately understood that part and allowed us to get that started. And currently those type of guarantees are issued by a customer without even any intervention by any NCB staff. It's done from their own end. And that is the future what I look at. So the customer would have control over their facilities, would have what I would love to see is them just pressing their buttons and at their end, at their panels, and LC being issued, pressing another button and guarantee being issued. The document handling should be on blockchain environment where all the stakeholders should be able to see it. And the bank will be just, I think most probably what I see, the bank would be a monitoring kind of an environment, and the trade would be happening between a buyer and a supplier, and all the supply chain stakeholders in the supply chain, which is currently being done by some banks, of course, internationally. And I would like to see that happening over here. And most importantly, I think it is the will. The will is there. It is also some of the corporates coming together and coming to the banks and asking for certain different types of things, for their own requirement. That also with forums like these, to get them together and to bring about their requirements. But overall, I think technology will continue to evolve, but I do not see technology as a requirement creator. I see requirement creators to create technology, the other way around. So it will continue evolving. And I think banks in Saudi Arabia and the region should be well versed with that kind of mentality, and not only be aware of technology, but creating those business cases that are extremely important for the technology creators to create something on the canvas.
It's, I wholeheartedly agree that technology is just an enabler. We have to address the business challenges that we have and use the tools we have in our toolkit to do that. And that's where the technology comes in to, to paint that picture that's needed to address the problems. Mohammed, from your point of view, if you were to look to the next, say, 3 to 5 years, would you broadly agree? Is there anything particularly you'd like to add to what Anjum has just said?
For us, I think the main frontier is how to digitize documents. That's one thing that we're looking at, because that would radically improve our process and bring about efficiency that we're looking for in terms of transaction speed and in terms of saving costs. That's one thing. The other thing is that we will continue to remain a focused enabler for fintechs in the market. And we look at fintechs that would basically help our process, help the market develop into a meaningful area for those fintechs. We can, obviously we're not, I cannot comment about investment into fintechs, but that's not the area that I look at. But eventually our key intent is to, on the trade side, do documents, and then do end-to-end transactions online, whether they are trade transactions, which are normal trade transactions, LC guarantee collections, and then of course, anything to do with supply chain finance and loans, that all should be automated. And then onboarding of customer is the third part, that all services need to be, customer should have onboarding for services, and those facilities should be available on our online channels. And lastly, we will enable customers to have their own access to admin modules in our technology platforms that they can use and appoint their own users, and all on their own. We become self-service basically on the online channel. And lastly, all the systems that we are now putting in are going to be platform agnostic. So whether you are working on a laptop, or if you are working on a PC, or you're working on a tablet, you will have the same look and feel, and you'll have the same experience while dealing with Arab National Bank. And this is what our roadmap really is going forward. Yeah.
Excellent, thank you. Now, Ahmed, I'm going to turn to you in just a moment, but I'd just like to offer out to the attendees to this webinar that if they've got any questions that they'd like to raise, feel free to do so through the Q&A tab that you have available. And if any come in, then I'm more than happy to put those to our panel, and we'll keep an eye open for them coming in. But Ahmed, I'd like to touch on with yourself there the subject of fintechs. We've heard Mohammed talk about the importance of fintechs within the community. But from your perspective as a corporate, how, I'm trying to get the right turn of phrase for this without being rude to lots of fintechs, because it's down to trust. One of the things that banks bring is a sense of trust. You know, that banking license means a heck of a lot. You know, there's certain caveats and rules and procedures and regulations that have to be adhered to. Would you feel comfortable dealing with a fintech if it's fronted by a bank? Or are you also perfectly comfortable dealing with certain fintechs directly? What's your view from a treasury perspective around dealing with fintechs in this modern economy?
Okay, يعني I believe actually I can say both. يعني I can deal with it directly or through banks. And يعني you can see that I'm a client of ANB as well, and I have been seeing the progress of their platform from old to current platform, and how it's moving, how it's improving, and I do really like it. I do really feel the change. I can get the benefit. I can touch it on daily basis. So yes, I believe that through banks it's benefitable to me, and still I believe that I can use it on corporate level directly on the company.
Okay, thank you. That's interesting to know. And Carlos, your experience going around around the Gulf, but also on a wider basis, where do you feel fintechs fit into that? And do you think that fintechs have a direct relationship to corporates? Do you think they're mainly talking to banks?
So that's an interesting question, Tim. And fintechs and even Finastra ourselves, right? It's key that we keep a close look into both sides of the world, right? The bank side and the corporate, because ideally when we build something or when we partner with a fintech is always to the benefit of the corporate, in this case of Ahmed, right? It is really for him to be able to have full control and visibility of his operations, of his forecast, so that he can sleep better at night. But we also need to understand that we cannot leave Ajum and Nasrullah, that from an operations perspective, that we have a tight control from a workflow, that everything that goes through tight gates that the regulator imposes, and we automate all that so that they can sleep better at night as well. So I really, what I see in the global perspective is this shift, and it was so interesting to hear Ahmed saying, we are, of course, cost is important, but today is not our top more beneficial factor. Actually, I want to be able to have full control, to understand my transactions, my positioning, and have automation behind that, right? So, and it's so refreshing to hear this from a corporate, right? It's, and I'm sure that in the other hand, you have Ajum and Nasrullah saying, yes, we understand that, because they are investing to give that to Ahmed. They are investing to ensure that they have the automation. And at the same time, we as an organization, as a fintech, Finastra, we are looking to the wider ecosystems and looking to which ones actually go beyond the transactional data. They actually go into the pure data to benefit the corporates. And we partner with them. Some of the integration points that we do has nothing to do with the bank. They are purely addressed to the corporate, where we then offer it through the bank platform. And that's how the future of collaboration will move forward.
Thanks, Carlos. Now, before I wrap up, I just want to go to one question that we've had in particular, because I think it's very relevant as we look to the future, and that's about cloud and cloud adoption. And this is specifically towards both Anjum and Mohammed. What's your thinking? I'm going to ask you to no more than 1 minute, because we're almost out of time, a minute each. What's your thinking around cloud, particularly in trade as a service, if you like, you know, being able to run trade, within your own clouds, and just being able to, you know, to that point of click a button and you get something actioned. How far away do you think we are from cloud adoption across the kingdom?
I think,
Anjum first.
Sure, go Yeah, on the cloud adoption, I think Saudi Arabia is almost there. They've already made a regulation around it. I think it will be launched very soon. But as I said, cloud is another technology to provide ease of doing business and having successful connectivity and storage of information, right? But this also helps us because now the business is going towards big data, and and AI. It's going to have it would require certain data for the AI and robotics to be more intelligent going over, which is a requirement for trade finance as a service for sure, right? So as I mentioned, and what is our end role? So our end role is that our corporate has the ease of doing business, like Ahmed was saying, right? So all his functionalities, all his business requirements need to be digitized, and how quick his service is provided to him. So for example, if he's waiting for a treasury report, he'd rather be able to see it and download it himself. I mean, if that is available, he could just manipulate on a dashboard. So his dashboard should be so friendly and the data should be available that he can even do his analytics himself. He customize it himself. And in that background, your cloud comes into play, AI comes into play, robotics come into play, right? These technologies are there. It's just how you design and move forward with it. And I'm glad to say that, quite a few companies are doing that.
Excellent, thank you. Mohammed, can I put the same question to yourself as well?
Well, I think it depends really on if smaller banks would basically new entrants, single branch banks in this marketplace would benefit from cloud technologies, whether it's offering cash systems or trade systems. But we as a larger bank would like to keep our independence as far as mission critical systems are concerned, that we run ourselves, but we are open to cloud solutions, and we are actively looking, for example, for our acquiring services for clearing and settlement, for example, on e-commerce acquiring and POS acquiring. There could be a possibility of looking at a cloud-based solution that is being offered by a specialist company in this area. So we are open depending on what we are doing, and if that business is not mission critical for us, we will look into that proposition. Till such time that the technologies have become are reliable and that they won't fail and that consistency of service can be guaranteed, we look at those solutions because they bring in the efficiencies that we are looking for.
Excellent, thank you. So look, we've spent an hour now. It really has flown by. I'd like to thank you all for the comments you've made, but the main points I've picked up on and noted as we've gone through is that it seems to me that you view the regulator plays a crucial role. The regulator does a great job in Saudi, is reactive and proactive, and that's great. And behind all that, we've got to view technology as providing the canvas, or as we would probably call it, the fabric of what we're able to paint on and enable the different solutions that the corporates need. It sounds to me as if the banks in the kingdom are well placed at the moment. You're thinking in the right direction. The technology is coming along. You've moved around digitalization off the back of the pandemic being a trigger to accelerate that. And corporates are adopting it and taking advantage of it. But there's also a need as we move into the future to look to that wider ecosystem at how fintechs can play a role and can plug into those environments that you're delivering and the services that you're providing for your clients. So, Ahmed, I'd like to thank you, and Anjum and Mohammed and Carlos, thank you for taking the time today. I trust for those that have joined us in this conversation, you found it of use. I've certainly found it interesting. There is some real cherry pieces of information that have come out of this conversation, and we'd be happy to follow up with yourselves directly if you make contact with us. But for now, thank you, A, to my panelists, and B, to the attendees. Thank you for joining. Have a great afternoon.
Thank you very much.
Thank you.
Thank you. Thank you.
Thank you.
Thank you, Tim.
Thanks, everyone. Thanks, Tim. I'd just like to remind the audience that the webinar will be available for on-demand viewing, so please do make use of that. And we look forward to seeing you all next Monday for the final part in the webinar series. Thanks again.
Take care. Bye.
Perfect. Thank you.
Bye.